This is Nightly Business Report with Tyler Matheson and Sue Herrera.
5-week win streak. The market rally rolls on as the S&P 500 joins the Dow in positive territory for the year. And there's one part of the market that's outperforming the rest.
Taking stock, the man who runs the top-performing small-cap growth fund tells us which stocks he's buying now.
Economic renaissance, one city's unusual revival plan to bring itself back from the brink, leaving it now with the narrowest wealth gap in the country. All that and more tonight on Nightly Business Report for Friday, March 18th.
Good evening, everyone, and welcome. A solid week for stocks. Today, the S&P 500 erased its losses for the year, joining the Dow, logging 5 straight weeks of gains. A rise in oil prices, decent economic data, and the Fed's decision to embark on a more gradual path of rate hikes helped power stocks over the past 5 sessions. Today, the Dow Jones Industrial Average added 120 points to 17,602. The Nasdaq gained 20, and the S&P 500 rose nearly 9. For the week, all of the major indexes rose 1% or more. And it's not just the Dow and the S&P that are deserving of attention. There's another group of stocks that's been quietly outperforming the rest. Dominic Chu has that story.
The stock market's made a strong comeback since hitting lows back on February 11th, and that move has taken both the large cap S&P 500 and Dow Industrials back to positive territory for the year. But for as much attention as those big guys are getting, it's the S&P 400 mid-cap index that staged the best performance so far in 2016. It's gained more than 2% since the start of the year. That's better than any of the major U.S. stock indices. Now, some investors look towards mid-caps as a possible market sweet spot. They're bigger and perhaps provide perceived relative safety compared to the small-cap stocks, and smaller with more perceived upside potential than large company stocks. So among the best performing mid-cap stocks this year, we're talking about names like Dick's Sporting Goods, also J.C. Penney, and U.S. Steel. Some value-oriented investment managers are already looking towards specific parts of the mid-cap market for opportunities.
What's compelling and interesting in the mid-cap space is these companies aren't necessarily as impacted by slowing global growth, and they also, well-run companies tend to be takeover targets by larger companies. And in a slow growth environment, large companies are looking for different ways to expand their business, and targeting good quality companies in the smaller end of the spectrum is one way to do that.
But while the mid-cap stocks have been outperformers over recent months, many experts don't necessarily feel like market values should limit your investments.
Obviously, with the strategies that are focused on small cap, then we look within that universe of small cap companies and identify the best opportunities. But for example, in the all cap strategies, we go with the best company regardless of market cap. In every sector.
It's worth noting that over the last 12 months, mid-cap stocks have not fared as well as their large-cap cousins. So these trends have been on the shorter-term side of things, but it's still a place where some investors are looking to find both defensive and more aggressive investment candidates. For Nightly Business Report, I'm Dominic Chu.
Well, the market is staging a comeback. You may have noticed that you might own a stock that is underperforming, and it has been a long time since it was a good stock for you, but it's a little hard to let go. Mike Holland, chairman of Holland & Company, joins us now to discuss when it's time to sell. We'll also ask Mike about his view about the overall market. You know, Mike, a couple of the stocks that have been in the news lately, like Valiant, a stock we're going to report on later, Aeropostale, they have had precipitous declines. I mean, 80, 70, 80, 99% of their value wiped away. How do you know when it's time to dump a company?
You picked two great examples of where people can let their emotions, Tyler, get involved with their decision making. I think in many cases, people buy companies because they have a great outlook and they think they got great value, and then things change and then emotions begin to get involved. When things start going down, people's egos get involved. And one of the first things I ever learned on Wall Street was don't lose money. You don't. How much can I lose is one of the first questions that I have learned to ask over the years. The worst mistakes I've made is giving into the emotion that, I paid $40 for that stock. It's still a great company. It's 25. I think the market is wrong. I think the rumors are wrong, et cetera, et cetera, et cetera. You make up excuses. The smartest people I know, the most successful people I know on Wall Street, cut their losses. They sell too soon rather than too late.
You also quote that classic Wall Street line, a stock doesn't know what you paid for it, therefore it doesn't owe you anything, right?
That's exactly right. So if people, you're doing such a big value for your viewers right now, talking about this, when people get into the stock market by individual companies, they have to try to be like, remember Mr. Spock from Star Trek? He was totally logical, totally rational, no emotions when he made decisions. And when it comes to buying individual companies, it has to be the same way. Whenever I've moved away from that, I've probably made a mistake and probably lost some money. But I think that at the end of the day, the stock doesn't have any emotion. You shouldn't have any emotion. And one of the good things about, if you choose a partner in your life, if you choose a house in your life, a home or a second home, you have emotions in that. And if you change your mind, it becomes very difficult to, in the case of a stock, it's very easy. You just sell it. It's such an easy thing to do. And there are plenty of alternatives. It's not like if you think Valiant was a good company and you want another medical device, or you want another medical, or Chesapeake Energy, you want another energy company, you can buy them the same day at the same time.
One of the things, I was talking to another person earlier today, he said when you start seeing any whiff of accounting irregularities, the accounting firm changes, there's some investigation, that's a sign. The other thing I've heard said, and I believe you agree with this, is the idea that you should ask yourself, would you still buy this stock today, knowing what you now know about what's going on in that company?
You're speaking, Tyler, to the choir right now. There's preaching to the choir. There's all of the things you just mentioned are things that I've learned through scars on my back of mistakes that I've made. When a company's management starts changing, when the accountants start changing, when their accounting, the methods start changing, watch out. Those are yellow flags. And there's no question that at the end of the day, any of these changes are things that you also have to pay attention to the internet, because there's lots of things that we used to have to dig through paper for.
That's true.
Today they're on the internet, and you can learn a lot of stuff very quickly. When you start smelling something and it doesn't smell right and doesn't meet the quote smell test, that's another way of Wall Street canard. The answer is you get out of it sooner rather than later.
All right. Mike, thank you so much. Have a great weekend.
Thanks, Charlie. You too.
Mike Holland of Holland & Company.
The president of the St. Louis Fed says interest rates should edge higher. James Bullard suggests that the central bank's inflation and employment targets have essentially been met, and that monetary policy should move towards more normal levels. But his comments come just 2 days after the Fed revised lower its rate hike outlook.
Former Federal Reserve Chairman Ben Bernanke says monetary policy is reaching its limits. But in a blog post, Bernanke added that the Fed has not yet run out of responses to a potential slowdown. He also says the probability of the U.S. using negative interest rates in the foreseeable future is quite low.
Meantime, consumers are feeling a bit less optimistic. An early survey on sentiment says confidence eased in March due to concerns about prospects for the economy and slowly rising gas prices. While consumers are no longer concerned about a recession, apparently, they don't expect the rate of economic growth to outperform the past 2 years.
Economic concerns are a big part of this election cycle, and so are some issues important to business and consumers. Take the internet, for example. There's a big debate over which type of company should control cyberspace, including the speed at which you view videos or download data. And as Julia Borston reports, some of the candidates have very different views on the issue.
President Obama has been a longtime proponent of net neutrality, one reason the FCC ruled in favor of a free and open internet last year. And a range of big media companies are invested in how the debate plays out. Those in favor want to make sure their streaming video gets to consumers without restrictions, companies like Netflix, YouTube, and Facebook. Those opposed are the broadband providers, AT&T, Verizon, and Comcast, who want to make sure they can manage internet traffic most efficiently on their pipes.
This election is going to matter because whoever becomes president is going to steer the FCC and also net neutrality laws in a new direction, whether that is for more net neutrality or for less.
The 2016 candidates are pretty much split on party lines. Democrats in favor of mandating net neutrality, Republicans against, looking to walk back last year's decision. Hillary Clinton says that enforcing strong net neutrality rules would protect free and fair competition. Bernie Sanders takes a more extreme approach in his support of net neutrality and criticism of the alternative.
Companies with the money will have the access, and small businesses will be treated as second or third class citizens. This is grotesquely unfair.
On the Republican side, Donald Trump strongly opposes it, going so far as to say in a tweet that net neutrality would target conservative media, which seems to misinterpret the issue. Ted Cruz calling it in a Facebook post, quote, the biggest regulatory threat to the internet and will lead to fewer choices, fewer opportunities, and higher prices for consumers. Ohio Governor John Kasich hasn't said much on the issue yet. But regardless of the election's outcome, the debate over how broadband providers handle internet traffic is certain to remain a contentious topic, and the FCC's recent legislation could be entirely reversed. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And Comcast, as Julia just mentioned, is the parent company of CNBC, which produces this broadcast.
Still ahead, a top-performing small-cap fund manager who's beating the broader market this year, and he'll tell us which stocks he's buying right now. The FBI and the National Highway Traffic Safety Administration are warning that vehicles are increasingly vulnerable to hacking. The agencies issued a bulletin telling manufacturers and the general public to be on the lookout for potential issues. In July of last year, Fiat Chrysler recalled nearly 1.5 million vehicles that could potentially be remotely hacked.
From hacking, we move to fraud, specifically in the healthcare industry. Such deception is estimated to cost the country tens of billions of dollars every year. It is a disturbing trend. In some cases, medical professionals even putting patients at risk to rake in more cash. Andrea Day has tonight's installment of Crime and Punishment.
We spend trillions of dollars on healthcare in this country. And we see about 80 billion of that is fraud.
And that type of fraud, according to FBI Special Agent Justin Shamet, is becoming all too familiar.
We do depend on our providers and people like these doctors and the cardiologists for these extremely complex things to tell us the truth.
But that doesn't always happen. In Ohio, trusted cardiologist Dr. Harold Prasad recently convicted in a major fraud case.
I'm shaken by it. And I see this stuff all the time.
This time, he says, at least $29 million unnecessarily billed to Medicare and other insurers. Just a small part of a very big reality.
It's deplorable. It's reckless.
Lamont Pugh from the Department of Health and Human Services says what's most shocking about it is how patients were put at risk.
You know, he examines them more as like profit centers.
According to investigators, Prasad told patients they needed stents and other high-end procedures, including some bypass surgeries that were not medically necessary.
That if they didn't do these types of procedures, that, you know, they potentially, you know, could die. So he's creating a sense of urgency.
And he says Prasad would then falsify the results
to make it appear as though the blockages that they had in their arteries were more than what they really did.
All of it, he says, to justify doing the costly work. Just take a look at this, an angiogram of one of Prasad's patients before the stent was put in.
We can't really identify anything that's necessarily wrong with the artery itself.
And this is after the doctor inserted a stent into the artery.
Relatively no difference.
And the risks, he says, long-term, including a lifetime of medications. So how can you protect yourself from unnecessary procedures and potentially falling victim to healthcare fraud? Here's some advice from the experts. First, always ask why. Why do I need this test or that procedure? Don't give your doctor blind trust and get a second opinion. Your charts are your property. It's a good idea to look at what's actually written in them. And last, if you're not comfortable, remember you can always walk away. Dr. Prasad was in court yesterday to learn how many millions he could have to pay back. That hearing will continue later this month. He was already sentenced to 20 years in the case, but has since filed an appeal. I'm Andrea Day for Nightly Business Report.
Luxury jeweler Tiffany saw a decline in sales and a drop in profit last quarter, and that is where we begin tonight's market focus. The results, though, were still good enough to beat estimates, and the company says it was hurt by a strong dollar. But the upscale jeweler warned earnings will continue to fall in the first half of this year, but it does expect growth in the second half. The news was enough to keep investors happy, with shares ending the day up nearly 3%. Starwood is killing its deal to be acquired by Marriott following a superior bid from Chinese firm Anbang Insurance Group. In a deal we told you about earlier this week, Anbang offered $13 billion for the hotel chain, which topped Marriott's bid. Marriott has 5 days to respond. Shares of Starwood up more than 5% to $80.57. Marriott ended up 2% to $73.16. The Food and Drug Administration is asking Eagle Pharmaceuticals for more information about an anticoagulant drug that it submitted for approval. The company says that it will work with the FDA to understand their concerns and figure out a path forward with the drug. Shares falling sharply on the news, ending the day down almost 19% to $43.50.
Bank of America will buy back another $800 million in its stock. This comes after the bank announced a $4 billion buyback program just last week. Bank of America shares up nearly 3% on the day to $13.79. Well, once a fixture in malls around the country, Aeropostale says it is seeking strategic alternatives for the company. The company reported its fourth quarter earnings Thursday evening. Trouble is, there were no earnings, only losses for the 13th quarter in a row. The company has seen its shares drop sharply, and I do mean sharply, over the past few years, closing the day down more than 45% to, yes, you're seeing it right, 26 cents a share. The auto supplier Lear is looking to relocate jobs back to the United States. The company currently in talks with the United Auto Workers Union about lowering wages so the company can fill about 1,000 jobs in a Detroit facility. Shares fell a fraction today to $111.91.
Time now to talk to our market monitor, who likes small cap tech stocks he says are on the leading edge of next generation technology. This is his first time joining us on the program. He's Chris Retzler, top performing portfolio manager of the Needham Small Cap Growth Fund, which is up more than 6% this year. Chris, welcome. Nice to have you here.
Thank you for having me.
Let's start overall with the market. I mean, we've had such a big turnaround in the market since a really bad start to the year. How do you feel about things in general?
I think things have been getting better. There's certainly a greater focus on value stocks. After a great year for the larger cap FANG, as they know them, there's been a rotation back to the broader markets. And so we're seeing that as money comes into a broader bunch of technology companies that have been really ignored for the past year. So we're confident going forward. We think that's where the value is. That's where we're putting our money. And we're still excited about the remainder of the year.
You're looking for 10 to 20% returns over the next 18 months in the trio of stocks we're going to mention here. You say they are a play on the so-called Internet of Things. I don't really know what the Internet of Things is. I've heard of it, but I got to ask you what it is, and then take us through your first choice, super microcomputer.
Yeah, great. These are fantastic stocks. And what we like to do is invest in companies where it's kind of selling picks to the miners. So when you think of the Internet of Things, the bigger companies would be a Cisco, a Google, an Apple, a Facebook. But we like to invest in companies that are selling them the equipment to make that happen. So super microcomputers, one name that you just mentioned, is a great, significant insider ownership that makes servers on the higher end. So really cutting edge servers. They're not the typical OEM names that you might hear from Dell or HP or IBM, which is now Lenovo. So they've been able to take a significant amount of share from Lenovo, which was, purchased the IBM, and picking up business here in the United States with federal contracts. They also have some next generation storage products. So you hear about things like all-flash arrays, SSDs. They're a big part of that kind of deployment of equipment.
Okay, next on the list is Form Factor. It supplies equipment into the semiconductor industry. You say there are acquisition integration opportunities.
Correct. They just purchased a great little company called Cascade Microtech. It's, again, a theme of M&A that's returned to the small cap companies. And what they're doing is they're combining to be a larger company. They have significant synergies. They're great management teams who've done this in the past. And we expect over the next 18 months for them to drive great opportunities on the financials and be a larger company, which should get a premium multiple going forward.
Well, when smaller companies become larger companies, that's usually a good thing, isn't it, Chris? Let's move on to quickly a couple of phrases on MKS Instruments.
Another play, semi-cap equipment primarily, but also in the medical field. They just purchased a laser company in California called Newport. Significant opportunities there again as they integrate. Both of these transactions need to close, and that's going to happen over the next kind of 2 to 3 months. So for an investor, it's a great opportunity to be watching and pick away if there's dislocations in the stock prices, because we think the opportunity over the next few years are really great for both companies.
All right, Chris, thanks for joining us. I know you'll join us again soon. Chris Retzler with Needham Small Cap Growth Fund.
Coming up, we'll take you to a western city that has a unique strategy to go from economic blight to revival.
Well, Tuesday is a big day next week, so here's a look at what to watch for. A hearing involving the Justice Department is scheduled in the Apple encryption case. Also that day, President Obama will deliver an historic speech in Havana about his vision for future relations between the U.S. and Cuba. And Dow component Nike reports earnings. Investors will be paying attention to what the company says about future orders. And that's what to watch next week.
As we approach the first day of spring, we take you to a city in the midst of a decades-long renewal plan, Ogden, Utah. Once dying railroad hub, now one of Brookings' top metro areas for advanced manufacturing, one of Forbes' best cities to raise a family, and it has the narrowest wealth gap in the country. Mary Thompson has the story of this city's economic rebirth.
On a chilly March morning, Ogden, Utah lands another company.
We could see that they wanted us here.
Air Medical Resource Group opening a maintenance facility at Ogden's airport, one employing 15 people with salaries starting at $55,000.
The emphasis is trying to get higher and higher wages so people have other opportunities.
Tom Christopoulos is the city's director of economic development. The city's goal for the last 16 years, expand the economic base and bring in higher paying jobs. All part of a plan lit by the Olympic flame.
It really did show the best of what at that point was a pretty tired community.
Launching its Renaissance plan 2 years before hosting the Olympic downhill events in 2002, Mayor Mike Caldwell says the city, home to two rivers and just west of the Wasatch Mountains, used the games to sell itself as a cheap, outdoorsy place to work and live. Ogden's also been able to get public and private partners to buy into its vision.
When the city takes on an improvement project, taxing entities like schools agree to give up incremental revenue from higher property taxes for a set period of time. That money is used to tear down blighted buildings and widen roads, all with the aim of making Ogden more business friendly.
President Joe Hunt saw this friendliness firsthand when he told Ogden if Air Medical Resource Group moved, it needed parking.
And they found the section of parking and leased it to us.
Ogden has learned to court business the hard way. A former railroad hub, its decline started in the 50s, and by 1990 it had lost a quarter of its population and plenty of businesses.
Nobody wanted to live here, and then nobody wanted to work here.
Taking a risk, the city turned a shuttered military depot into a business park. It's now home to 6,000 jobs and firms, including Esurance and Hershey. It's building a lifestyle park for outdoor companies, an industry Ogden sees as one of the three pillars of its economy, along with aerospace and advanced materials. An Ogden native who's been in his role for 9 years, Christopoulos knows while there has been plenty of progress, plenty still needs to be done.
It's a generational project. It'll go long after I'm gone.
Years of small steps needed to make Ogden better in the long run. In Ogden, Utah, I'm Mary Thompson for Nightly Business Report.
To read more about Ogden, Utah's revival, head to our website, nbr.com.
Great story. That does it for Nightly Business Report for tonight. I'm Sue Herrera. We'd like to remind you this is the time of year your public television station seeks your support.
And I'm Tyler Mathisen. We thank you for your support. Have a great weekend, everybody. We'll see you Monday.